Opendoor stock finished Monday's trading session on a strong note, closing up by 21 cents or just under 3% at $7.37 per share. While the broader market was mixed, the real story today lies in the shift in tone around the company, both from Wall Street and from inside Opendoor itself. After weeks of steady sideways trading and cautious sentiment, we finally got a signal that the tide may be turning. Morgan Stanley has reportedly upgraded its price target on Opendoor to $6 per share, marking a significant shift in perspective from one of the major investment houses that had previously been among the more skeptical voices on the stock. Now, yes, that target is technically below the current share price. But that isn't really the point. What matters here is direction. This is the first time in a long time that a large Wall Street institution has raised its target instead of cutting it, and that matters psychologically. It's a recognition that something is changing, that maybe the doom narrative around Opendoor has been overplayed. To put it into context, Morgan Stanley had previously held one of the most bearish stances on Opendoor, with older reports pinning a target as low as $2 a share. Moving that up to $6 is a big leap. It implies that even analysts who were once dismissive are beginning to acknowledge progress, not necessarily perfection, but movement in the right direction. And that movement has been visible for weeks now if you've been watching closely. Kaz Nejatian and Rabois have been systematically re-engineering the business, integrating AI into every corner of the operation, cleaning up unnecessary software costs, realigning leadership, and bringing in proven operators from Shopify, Dropbox, and beyond. Earlier today, Kaz shared a post on X that might seem like a small detail, but it actually says a lot about where the company's culture is right now. He said, "I'm now on Opendoor's PagerDuty. This feels like a rite of passage for every product manager, when engineers add you to the SEV alert list." Now, if you've ever worked in tech, you know what that means. PagerDuty alerts are what engineers get when something goes wrong, when systems are down, bugs appear, or a critical process fails. The fact that Kaz, the CEO, is jumping into that loop signals hands-on leadership. It's a simple but powerful message. He's not just talking about operational excellence, he's living it. It also reinforces a bigger shift happening inside Opendoor. The company is clearly moving from being a growth-at-all-costs startup to a disciplined, data-driven operator. The kind of place where everyone, from engineers to executives, has their hands on the product. That kind of discipline is exactly what you want to see in a company trying to navigate tough macro conditions. And those macro conditions might finally be starting to soften. Inflation continues to cool, treasury yields have eased slightly, and mortgage rates have come down to their lowest levels in months, hovering around 6.25% in some regions. That may not sound dramatic, but when you're talking about affordability in housing, even a half-point change in rates can unlock thousands of potential buyers and sellers. We're also just days away from the next major housing data release, which lands this Thursday. That will be the first of 3 known catalysts for Opendoor over the next 3 weeks, followed by the Federal Reserve's rate decision on the 29th, and the company's open house earnings call on November 6th. So as we head into this week, you can feel the narrative tension building. On one hand, we have Wall Street gradually shifting tone, not yet bullish, but no longer as dismissive. On the other hand, we have a leadership team that continues to communicate openly, build in public, and execute with focus. There's a saying that markets often turn when sentiment is most uncertain. That seems to be where Opendoor is right now, a point where analysts still see it as a speculative or misunderstood play, while long-term believers are doubling down quietly. Just look at how the price action has behaved. For nearly a month now, the stock has bounced repeatedly off the $7 floor, each time holding that level before recovering. Every touch has reinforced it as a technical foundation, a sign that accumulation is happening quietly beneath the surface. Monday's move to $7.37 once again confirms that buyers are stepping in whenever the price dips below that psychological level. This resilience becomes even more interesting when you contrast it with the tone of major publications over the last few weeks. The Wall Street Journal and Barron's both ran skeptical pieces, framing Opendoor as a meme-style stock. But the numbers tell a different story. The company's balance sheet is improving, its AI tools are driving cost savings in real time, and its leadership additions have brought in proven experience from major technology firms. Even the PagerDuty comment, while playful, subtly conveys that Kaz Nejatian is embedding himself in the operational rhythm of the company. That's exactly the kind of intensity that can produce real transformation from within. Meanwhile, the Fed's current tone is becoming more dovish. Jerome Powell's comments last week indicated that policymakers see real progress on inflation and want to avoid over-tightening. That shift, combined with lower long-term yields, suggests that the worst of the rate pressure on housing may finally be behind us. And if that's true, it sets the stage for a re-rating of companies like Opendoor, whose value is directly tied to housing liquidity. The company doesn't need prices to surge, it just needs transactions to resume. More buying and selling activity equals more revenue, more efficient pricing, and ultimately, improved margins. The Morgan Stanley adjustment to $6 a share, while still conservative, signals that even traditional models are beginning to account for a more active housing market and better internal execution. It's worth noting that the analyst consensus is still far lower than where the stock trades today, and that's a feature, not a flaw. It means that the market is already starting to price in something that the models haven't caught up with yet. We've seen this story before, with Palantir, with Carvana, and even with Tesla. Analysts chase price, not the other way around. For now, though, the key is momentum and narrative. Monday's green session isn't a breakout, but it's the start of something subtle, renewed confidence heading into a data-heavy week. As of Monday's close, the stock is sitting comfortably between support at $7 and short-term resistance around $7.50 to $7.60. If volume increases into Thursday's housing report, that range could tighten before the next leg higher. Investors should also keep an eye on how the broader market behaves over the next 48 hours. If the S&P and Nasdaq rebound after their choppy sessions last week, that rising tide could lift high beta names like Opendoor. Conversely, if macro sentiment weakens again, expect the stock to test the $7 line once more before bouncing. But here's the bigger picture. Opendoor's story isn't about day-to-day swings. It's about the shift in perception that's now unfolding in real time. The narrative is moving away from can they survive to can they execute. That's a major psychological inflection point. And if Kaz Nejatian continues to communicate with this level of transparency, showing that he's not above the details, that is literally plugged into the systems his engineers manage, it sends a powerful message to both investors and employees. It says that Opendoor isn't just a tech company dabbling in real estate. It's a tech-driven real estate platform that's learning to operate like a modern software company. So as we head into Tuesday's pre-market, here's the takeaway. Opendoor has not only held its ground, it's regaining credibility. The company is becoming harder to ignore. The upgrade from Morgan Stanley, the operational discipline from Kaz, and the approaching catalysts are all parts of the same story, a company that's maturing faster than most expect. This is the phase where patience pays off. Analysts are still adjusting, institutions are watching quietly, and the retail base continues to hold with conviction. The volume might still be thin, but that's how accumulation phases always look before the breakout. If Thursday's housing data beats expectations, it could serve as the spark that wakes the market up to what's been building quietly beneath the surface. The Fed decision and the earnings call that follow could then solidify that shift. For now, though, this Monday aftermarket moment feels like the calm before momentum. Opendoor stock remains steady, resilient, and underappreciated, and as the catalysts line up, it's positioning itself to remind the market that sometimes conviction wins over consensus.